Hello and welcome to Investors Hangout, your weekly guide to making smarter financial decisions. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, the Sensex plunged by 3,000 points this morning, leading to panic among investors. So in such a situation, what should you do? What is happening? Why is it happening? To decode all of this and more, we have with us Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
First up, what's behind today's crash?
Combination of factors, the recession war, global reasons and domestic too. If you look at the imminent fear of a global recession is what we are beginning to talk about, and the ramification of this, we are unable to estimate that what is going to happen, because the global trade is so integrated that if there is a different tariff on different product originating from different countries, we don't know what it will translate into. Yesterday I was watching some video of Milton Friedman, and he was saying that, when you manufacture a pencil, the graphite comes from somewhere, the wood comes from somewhere, the paint comes from elsewhere, and how it all combines and where it originates from, and so many things. So what we have seen in the past, the global trade and free global trade, moving from there to completely regulated, so it is a completely unknown territory. And it is a change of rule which will have a bearing on every business, and that is why the market is fearful. My worst fear is that even if we are able to reverse it, the kind of anxiety it has created among business can actually trigger a global recession.
All right, so how bad can it get from here?
There are two dimensions of how bad. One is that how bad the market can get, and how bad the economy can get. And in fact, how bad the economy can get is a very significant thing, because if we lose our job, if businesses actually close down, and it can happen because, India has been the biggest supplier of IT services. When I look at it with the lens of, trade, tariff on services or trade or exports and or imports from their point of view, and that coupled with AI, the revolutionary AI that we are witnessing, where the low value added stuff, so the combination of this could be devastating, more so for in India. So, small businesses, technology services businesses, all kind of export, it is all up for uncertainty and anxiety. Of course, over the long run, people will get up in the morning, consume things, go about producing something, go about consuming things, and go about buying cars and go about traveling. But the disruption that we are seeing because of the changed order, or it has the potential to completely change the order of trade. So one is the economy bit. The second is the market. Markets, we know that, things will get back to normal. Many businesses will die. New businesses will thrive. And, that will be the fallout. So markets could be far more turbulent than the economy. And economy, it will take some time for us to figure out that how it actually is panning out. In fact, it is turning out to be much worse for the US than for India.
So to put it all in perspective, and with regards to the market, what should investors do right now? Should they buy more, hold, sell? What should be their course of action?
One is that, if you have a sound plan, if you have been listening to Investors Hangout, which means that not that you become an expert, but you are thoughtful about it. You are able to differentiate between short term and long term and where to invest. If you have a plan, do nothing. And over a long period of time, 4-5 years time, I am very confident this problem can linger for a couple of years. If you're a short term investor who drifted in the market, then by all means, get out of it, take your loss, square it up, because you'll be left with money. But if you're there for a couple of years, don't panic. The other thing is that, if you have some money, you have been waiting for all these occasions when we go back, when we travel in time and, we go forward and look back, and then it looks like an opportunity. But where you're in the middle of opportunity, you are so fearful that you don't look at it as a mere, opportunity. It looks like, somehow we could escape it. So I would say that if you have some money, have a plan. Have a plan for next 6, 8, 10 months. If you have 5 lakh rupees, then spread it over the next 7, 8 months. I think it will, for a holding of 5, 7 years, it will prove to be very rewarding.
Okay, and what about the SIP investors? What should they be doing in a falling market?
No, same as I said before. If you don't need this money for 5 years and more, carry on. It is more important for you to carry on with your SIP because you invested when the markets were high.
Yeah.
And if you stop investing when the markets are low, then you are not actually unlikely to be benefiting from it. So carry on. This problem is not going away. This will create anxiety. This will create uncertainty. There will be winners and losers of a different kind, and that we still have to, because this is just the beginning of the war. It is the beginning of the war with the tariff announcement, reciprocal, countries responding with it, trade negotiations going on. There's a possibility that, India might turn out to be a winner as a result of all this. But can you really withstand the whole uncertainty that we are going through? And that, I think, will cause, huge problem for the market in the medium term. And economic beneficiaries and losers, we still have time. There's a great possibility that we just might end up being a winner. I think my advice to investors will be focus on the fundamentals. And, for mutual fund investors, the fundamental is diversification, track record, being on a methodical plan. And for stock investor, it is high quality companies. There will be quality companies which will be able to navigate this change better, because right now the definition of a quality will be companies which will be able to withstand, survive and tide over this crisis better. Because companies transform. Companies are not frozen in their definition that they have to do this and they will never do anything else. So there are good companies which will be able to, adapt. And there will be companies which will die or they will not be able to adapt well. Focus on quality.
Right.
Quality mutual fund, quality stocks.
Okay. Well, thank you, Dhirendra, for your insights. Thank you for watching. Don't panic. These times, they may linger for a while, but if you have a plan, stick to it. Do not panic. That's all that you need to take from here. That's all we have for you in this episode. Keep watching this space for more information. Take care. Bye for now.